Welcome back, and joining me for a closer look at what's played out on the market scene today is Graeme Franck from PSG Wealth Sandton, Grayston. Thank you so much for your time, Graeme. Lots that kept us busy today. Let's start off with the US's June consumer inflation print that came out this afternoon, in line with market expectations of 2.7%. It did heat up, though, from May slightly. How key is this figure in reading the impact of tariffs so far, and really the impact that it could have on monetary policy?
Yeah, thanks. It's so it was, as you said, it was sort of in line with expectations, and then what they do is they further break it down to sort of core headline inflation, and core headline inflation was a little bit lower than consensus estimates, i.e., the market wasn't quite as hot as people were expecting, so that could bode well for a further interest rate cut, but pretty much at the margin, to be honest with you. Right now, the market is expecting 2 times 25 basis point cuts, so another 0.5% for this year. There's 4 more meetings this year, so they're expecting 2 of those to cut by 25. I don't think today's announcement changes that much.
All right. Well, something else that we're also sifting through in the US are the big bank earnings, particularly from JP Morgan, Citigroup, and also Wells Fargo. And it seems that quarter after quarter, those big banks, they're topping analyst estimates, and this time is no different. Is this a sign of a resilient economy and markets there in the US?
Yeah, absolutely. In my previous life, I worked at Citibank, so I know the beast well.
Yeah.
The trading revenue out of JP Morgan was particularly strong, and that tends to happen when markets are volatile. Their core sort of net interest margin that you and I borrow from banks and pay them a margin, that was up a bit, nothing spectacular. But yeah, you're right, a sign of strong economic fundamentals in the US. JP Morgan's share price has done exceptionally well. That's up almost 40 or 50% in the last 12 months. So, maybe now's the time to not be buying too much of it, to taking a few chips off the table, but still a great bank, the number 1 franchise bank in America. And the earnings. Look, the share price when I last looked hadn't done much. I think the market was expecting strong earnings, and that's pretty much what they got.
All right. Well, talking about economic fundamentals, we did get a few GDP prints out. Let's actually start off with China. That economy surprising to the upside in the second quarter. I saw mixed growth dynamics when you look at the retail sales, industrial output, fixed asset investment. What drove that growth, and really what are the details telling us about where that economy is headed?
Yeah, so the growth out of China was slightly, economic growth was slightly better than us in the market were expecting. Obviously, I think, as you said in your introduction, that's also good for South Africa and resource companies. It's potentially also good for the rand. Now, whether today's rand strength was on the back of China or whether it's local politics, probably not local politics.
Yeah.
But it's the rand in itself has gone. It's stronger than its 50, 100, and 200-day moving averages, which is quite a key technical level. As I say, whether that was driven by China or not, but we'll certainly take stronger Chinese GDP data. Some people were suggesting it was some preemptive buying ahead of tariff increases, which gave a short-term boost to Chinese GDP. But at the margin, it was pretty strong.
All right. Well, let's get into some of the company news that came out on the JSE. 91 seeing an uptick in their assets under management for the quarter ended June. What did you take from that, particularly with the Sanlam transaction taking place?
Yeah, it was a good set of numbers. I think, as you mentioned, it was up 8% year on year. Sanlam added about 2, so the core AUM, assets under management, increased by about 6%. I mean, they're such a huge beast of a company now that to grow off such a low base is always going to be tricky. But, very well-run company. We support all their various solutions, their unit trust, their platform. So it's a good company, good, solid company, but I think it's very, very big now, and it's going to be difficult to grow much further.
Well, let's go into furniture before we head to your stock pick quickly, Graeme. I say furniture, some people say credit, and that is Lewis. We did have the African Ratings Agency, GCR, affirming their national scale rating but upgrading that outlook from stable to positive. Is this a story of continually improving fundamentals in the business?
I think so, yeah. I mean, I think as I mentioned to you on the side, we don't really buy too much of Lewis, just the liquidity is too low and it's quite hard to get in and out of the stock. That said, they've had quite a nice management self-help story for the last, time runs away from us, but maybe 12 to 24 months. So I think this is just a further affirmation that management are doing the right things off quite a low base, to be honest. I mean, they got themselves into some trouble. They've concentrated on improving the credit book and just their core furniture sales. So, yeah, not a big announcement, but at the margin, certainly positive.
All right. And yeah, we see that stock up almost 5% on the day. Well, let's get into what you are buying today, Graeme. What is your stock pick?
So I'm going to go for Valterra. So it's the old Anglo-American Platinum, old Amplats. As you know, they were, Anglo-American, they've unbundled their shares. So Valterra are 100% standalone company. I think that's always a great motivation for management. We see it a lot when you sort of take the anchor of a big shareholder away and shine the spotlight on management. But more importantly, fundamentally, the platinum price is up significantly. It was up 28% last month. And I think people tend to underestimate both on the upside and the downside when a particular commodity price goes up. Some of the underlying company equity prices play catch up very, very quickly. And that goes for the downside as well. But right now, in this platinum price environment, I think Valterra is looking good, even after an increase in the share price more recently.
Great. Thank you so much for your time and for your insights on what has moved investors' money today, Graeme. That was Graeme Franck from PSG Wealth Sandton, Grayston.